Your host Samuel Olaide is here again. Welcome everyone to another episode of Layola Talks podcast. And on this episode, we'll be talking about the Nigerian economy, a continuation of where we stopped, just a more holistic, stat-based grounding of what we are expecting in Q1 2026, the top businesses that are scaling in the Nigerian economy, what you need to know as a Nigerian citizen about the economy, if the economy is still fruitful, key investments, opportunities you could also look into. Right. Welcome, and I hope you're going to enjoy this podcast. Welcome. Yeah. So very quickly, we're going to continue from where we stopped our last episode. We are going back at the Nigerian economy from two angles simultaneously. What the data is saying about the economy in Nigeria, all of us are going through it. There's the macro analysis of what the economy is, and also there's the micro analysis of what the economy is meaning, what me and everyday common person feels in the economy. So there are two pictures, and they are very different, right? And the understanding of that gap gives us a whole perspective of the whole point. So the data sources across the bottom to the side is we'll be taking data sources from Nairametrics and all of that. Yeah. So as I was saying, we're going to look at the macro snapshot of the Nigerian economy. It's quite a six-layer macro snapshot. With this data, you're able to understand clearly what the Nigerian economy is saying in this day and time. So I'll just go to my slideshow. Yeah. So from the top of our head, we see the macro snapshot of the Nigerian economy. We see a 4.4% GDP growth. That means the economy is growing by 4.4% on a year-to-year basis. It's been argued that Nigeria needs to grow 8.8% on a yearly basis for the massive population we have to fuel our macroeconomic growth for the people on the street and everyone in the country will feel like the country is progressing. So we'll see how our government is able to double down on this number over the next 5 to 10 years. The inflation rate that was 34% as at early 2025 has come down to 15.1%. I think it's a positive news, it's a positive trajectory. However, it's still high comparing to where we were 5 years ago, 2020, during the pandemic. Our foreign reserve is one of the highlights. Our foreign reserve was about 29 billion when Buhari came in. But right now it's about $50 billion, which is quite a good statistics, right? And now we also have our all share index on the Nigerian Nasdaq, right? And we have over 126 trillion naira investment on the Nigerian stock exchange, which is actually a positive figure. And in terms of the rate-based cut on the CBN policy, in terms of the interest rates and this stabilization phase, CBN is giving out interest rate at 26.5%. It was at 28% at some point. So to some people, it's a positive. To some people, it's still very high for small business owners to take loans to scale. So this is the statistics. And yeah, there you have it. In terms of Naira to dollar valuation, as at 2025 January, the Naira was about 1,700, if I'm not mistaken. And over time, it has fluctuated from 1,700 to 1,500. It came down to all the way to 1,290 as at 2 weeks ago, and now it's stabilizing at 1,395. So this is the microeconomic snapshot. We have a very strong foreign reserve. Next, we'll look at the inflation retreats. As I was saying, as at Q1 2025, we had an inflation as high as 28%, and it moved from actually 34% down all the way to 24.5, then moved down all the way to 15.1%, which is a positive one. In January 2026, inflation's lowest has been 15.1%, which means there's kind of like the 50% reduction in the price of commodities from Q1 2025 to Q1 2026. So this is a positive note, right? And you see that in foods, grains, cooking oil prices cooling down to about 9% inflation, but the general inflation in the country is 15.1%. Over the last 10 months, there have been consecutive declines over the last 10 months from Nigerian Bureau of Statistics. So this has been a positive note. And the CBN targets in 2026 is 13%. That's interesting. Headline inflation 13%. One would think for an inflation rate that was able to drastically come down 50% in over 1 year in 2025, we should see something related to that, or a single digit headline inflation in 2026. But the CBN came out to say they are targeting about 13% before the end of this year. Is interesting one. We'll see if they are able to achieve this, and we'll see if it could probably be lower, because the best optimal inflation for an economy like Nigeria, a growing, struggling poor economy like Nigeria, is a single digit inflation, a single digit headline inflation, right? And yeah, I think the next thing we have here is the Nigerian Stock Exchange, because it's one of the macroeconomic snapshots. The Nigerian Stock Exchange is really booming. For those who invested in Nurture, Infinity Mortgage, FTG Insurance, they had like a 350% increase over the last 3 months, 314% increase, 111% increase. Let me paint the picture, right? Let me paint a picture of what this means. So if I've invested a million naira, if I've invested a million naira to Nurture Chemicals, right? To Nurture Chemicals as at say 3 months ago, and currently Nurture Chemicals is trading 340% growth over the last 3 months, right? And I've invested a million naira. I think by and large, what I should be getting right now in terms of 300% increase on a million naira investment should be around, if I'm not mistaken, that should be around, no, that should be around 3 million, 3 million naira, right? And that is huge. There's no business in Nigeria which you can get 1 million to 3 million under the space of 2 months. So it's a positive thing for the Nigerian Stock Exchange. But again, these stock these stocks are high risk stock, because there are new businesses coming into the Nigerian Stock Exchange. So most times people bank on old horses that have been dependable, that their shares has not been up and down, and very volatile. So these are the high performance, but it doesn't mean you should always go for the high performance, because as fast as they go high, it's also as fast as they come down, right? We can also see some positive outlook from Julius Berger, from Jay's Bank. Jay's Bank is a new bank that came into the Nigerian economy and is actually doing well. And from Japol Gold, right? And yeah, just to explain to you, businesses in the Nigerian stock market are actually doing good, the biggest gainers, right? In terms of stock to watch, yeah, what are the stocks to watch? Which businesses stock should you watch, right? One of Okomu Oil has been like, some people bought Okomu Oil at 25 naira per 25 naira per share index, and today is 1,225. So that's a huge growth over the last 2 years, right? MTN has always been dependable. They had a 13%, 13.5% increase just in January 2026 so far. Guinness Nigeria also has been up there. Zenith Bank, Aradai Holdings, Nascon Allied. These are big, high potential stocks that could actually do well and even double their current growth rates in the next 2 to 3 months. And this is not a financial advice, but based on what the data is saying, these are businesses that are actually doing now to our current economic heading. We all know fuel has increased at the pump price from around 850, 860 naira per liter down to 1,200 per liter. Why is this, right? Many people came to meet with Sam. Nigeria is an oil producing country. Why are we paying twice as much for oil, right? This war in Iran, how does it affect us, since we are an oil producing country? And that's where I am right now, to explain to you why we are facing what we are facing. How the Iran war has hit Nigeria, the US-Iran war. So we all know the Brent crude oil price was $64 per barrel. We moved on to, in the space of 2 weeks, we moved on to 76, 87, $120 per barrel, even up to $150 per barrel, and down to 96 right now. So right now it's at 96. This is what it's consolidating as, and it seems cool. However, let's explain to Nigerians why the crude oil prices is high and why it's affecting Nigeria the way it is, right? First of all, there's a sh- there's a geographical location in the Middle East called the Strait of Hormuz. This is where 70% of the oil and gas ships ply through, right, to take oil to Asia, to Europe, to North America, even down to Africa, right? 20% of global oil LNG is being disrupted currently at the Strait of Hormuz. Iran is not allowing ships to pass, right? This then has increased the shortage of oil in the world, which will make the oil prices bump up, right? So what's the budget win for looking like? Ideally, for an oil producing country like Nigeria that has capped their yearly budget at $65 per barrel, this $96 per barrel increase, or one that boomed up to 120, but now it's stabilizing at $96 per barrel increase, is extra revenue for the Nigerian government. But the true question is, can the Nigerian government capture this, right? What is our total output per month? I heard we are doing 1.5 billion, 1.5 billion dollar per barrel in as in terms of NMPC, right? We are producing at about 1.5 billion barrel per day, right? And our oil prices are shoot up. So the Nigerian government should be making more money. However, the catchphrase here is Buhari actually borrowed major loans from international community, from World Bank, from World Bank majorly, and most of our oil blocks are being used in repaying these loans. So yes, the price of oil has gone up, but the people who will be collecting this revenue are the foreign World Banks and the major powers that are invested and bought our loans that we are repaying back. So I think Nigeria is just really benefiting maybe 35 to 40% of the actual revenue we should be getting in based on the loans we've used our oil resources to borrow over the last 4 or 5 years, especially under the Buhari administration. So yeah, that's the issue right now. For example, crude oil shortage. Now back to Nigeria. Why is Dangote increasing price? Many people ask. So there is this agreement between Dangote and the Nigerian government that Dangote will be buying oil from the Nigerian government in naira, right? Crude from the Nigerian government in naira, so you can refine it. However, the plan was at least 13 NMPC cargoes will be delivered to Dangote refinery per month in naira. But however, Dangote right now is collecting just 5 NMPC cargoes of crude oil to be refined. So he still has to measure that 13 by buying it from America or from international community in dollars. So Dangote is still buying crude oil outside this country to refine dollars and sell it back to us, right? Just 5. If NMPC could provide the number of crude oil he needs effectively, the price of oil won't be this high. Or if Nigeria has a huge reserve, which we do, the price of crude oil won't be this high. Even in America, the prices are shoot up, but because they have huge oil and gas reserve, they're able to cushion the prices, and it was not as detrimental as it should be, right? And the domestic pump price over the last 2 weeks has moved from 887 down to 1,200, and now it's stabilizing at 1,100, right, in 1 week. And you see transport fares increasing, and you still start seeing it eating in a already struggling economy. So this is the explanation. So two things, right? One, Dangote needs 13 NMPC cargoes per month, but he's only getting 5, which would force him to buy from international markets in dollars, which is not cost effective to him. So he needs to increase pump price because he's buying crude oil, and NMPC is not able to service it. In countries like Nigeria, still struggling to meet our daily refinery rates, right? It's a very big question many people are asking, many people don't know answers to, and I think over time it's different things in government. Over time we'll get clearer picture, but that's the situation of Nigeria. Why the pump price is high, even because we're an oil producing country and we have no business with the Strait of Hormuz, is that NMPC cannot produce the capacity Dangote refinery needs to give Nigerian owned refined oil to Dangote needs to buy from the international community in order to meet his monthly limit, which then forces him to increase prices as well. So this is the situation with our oil and gas prices, right? We can also see from this slide more explanation to why the pump price have moved from 774, because as at 3 weeks ago, 1 month ago, Dangote came into the market and tried to reduce the prices against oil marketers in the country, which and brought it down to about 790, 780, and also increased it to like 820, right? And everybody had to be forced to bring down that price. Now, with this Iran war, Dangote has increased this price again based on logistics and supply chain demand, and everyone also has to do what has to increase their price. And Nigerians will be like, is Dangote playing a monopolistic game in the oil and gas business in Nigeria? He just came in. Why is he having the control share? One, the Dangote refinery is one of the largest refineries in the world, not even in Africa, in the world. It's even a threat to European refineries and the European powers everywhere. So it has the capacity to even refine oil for West Africa, East Africa, even all of Africa, right? But the diplomatic issues, not diplomatic, now political issues here is that NNPC is not producing enough crude oil as it should. And even the ones it is producing, we are using it to service our loans we've taken from the international community. So this is major. And you see the prices of oil move from 3rd of March from this down to 11th of March to this, right? In terms of crude oil, there's no discounted crude. Nigeria sells best grade to international buyers first. Dangote buys leftover crude at full market rate, not as domestic priority. And people will say, who are these international buyers that Nigeria are selling crude oil to? It is our debt that we are servicing that we need to always provide optimal oil to the guys that actually borrowed us that debt. And people say, what did they use this loan to do? It's under the Buhari regime. I build a rail station going to Niger Republic and all of that. So that is a different political discourse. My job is to explain statistically what the Nigerian economy is saying, why we are going through certain issues in the economy, why we are growing at the pace we are growing in the economy. Another point is there's a crude oil shortfall, which I mentioned. Dangote needs 13 NNPC cargoes. However, he's getting just 5. So he buys balance on international spot market. And when he's buying balance from international spot market, he's paying in dollars. And if he's paying in dollars, the price of crude in the world is about $94 per barrel. So he also has to increase his price for with the retailers in Nigeria. So it's the Nigerian dynamics. What about freight cost? Freight cost means the ships that are moving this oil, the cost of these prices has also increased. So tanker costs surged from $800,000 per ship to $3.5 million per shipment as war risk premium spiked at Hormuz route. So even these international buyers Dangote is buying it from, they increase their prices beyond the Brent oil prices just because of supply chain logistics issue, because it's super risky to buy oil from the Middle East right now, right? And also, we have a very, very tacky and funny reason why our oil prices are going this much. Do you know there is a 47 government agency fees that refineries like Dangote needs to pay in order to get crude oil out of NNPC back to the refinery? There is a 47 different fees, right, that needs to be paid to different government agency baked into every liter of petrol. So it's a very interesting dynamic. Nigerians can question their government why they are facing this. And also, finally, we have a fully deregulated market since 2013 since 2023. I beg your pardon. Since 2023, when Tinubu reduced the price, when Tinubu removed subsidy and deregulated the downstream sector, and now the pricing follows international benchmark. Because before 2023, the government has to subsidize oil. But now that the government is not subsidizing oil, whatever the market says, we will fully feel it. Some countries, they are still rich enough to subsidize oils, so their citizens might still be buying oils at favorable pump prices. But that's not our situation as Nigeria. And this is why the price of oil is what it is today. That's the analysis. No discounted crude route, crude oil shortfall from NNPC not giving Dangote what it is, supply chain logistics, the fact that the price of shipment is increased for the 7 government agency fees, and fully the subsidy thing makes us get the full brunt of the international market. Whatever is happening in the international market feeds us because government is not there to shock in it or subsidize our oil. So that explains the cost. About the economy, let's talk about something that concerns me and you, right? What has the prices of crude oil increase affected the common man on the streets, right? We'll be looking at this graph that explains the cost of living in 2020 versus the cost of living in 2026, right? And on this chart, you could see 2020 basket and 2026 basket, right? In 2020, uh, you could see you could see a basket of food goes down to 20,000 naira. With 20,000 naira, you could actually get a full basket of groceries. But that same full basket of groceries in 2020, right? The same things you get with 20,000 naira in 2020. Today, you get it with 160,000 naira. That's the level of inflation we've had in 5 years. 5 years, 5 to 6 years, but it's 5 years, right? In 2020, what 20,000 naira is going to buy, the exact valuation is 160,000 naira would buy it in today's market. So we have a 582% grocery increase, right? Because I remember a time where yam was 700 naira per tuber. Right now, a yam goes for 5,500 per tuber, right? And this is current reality of Nigerians. So inflation has really shooting up, wage has increased a bit um because then minimum wage was about 30,000 naira, but now it's 70,000 naira. But this has nothing on the rate at which inflation rate has really eaten up Nigerians' purchasing power, right? Before, people spend 30% on income spent on average household food, right? In terms of food, in 2020, people spend 30-40% of their income on monthly food, but now people spend 60 to 70% of their income on household food, right? Just to explain to you how much groceries have shoot up in the Nigerian economy over the last 5 years and how the Nigerian people are facing it. In terms of bus fares in Abuja, there has been two times the actual rate of bus fare. So whatever the price of bus fare is in 2020 is now twice the price in Abuja. While in Lagos, it has been four times the price, right? So whatever the price of bus fare is in 2020 is now four times that exact price right now in 2026. So for example, Onipan to Yaba was about 500 naira per trip, then probably right now is about 900 naira per trip now. So it paints a picture of how much inflation has hit the Nigerian economy over the last 5 years, from the Buhari times to the Tinubu times, and the subsidy here, the parallel market rate of inflation. So the question we then beg to ask is, if people claim Buhari's regime was really that difficult, and the truth was it was really difficult, right, in all sense, in all honesty. However, government was giving things called subsidy, and because there was subsidy, prices and inflation was not shooting up this much. But now that they've removed subsidy and we are meant to face market forces, everyone would bear the brunt of what market forces is on a year-to-year basis. So there's no cushion for the Nigerian masses, even though the Nigerian masses is not making as much, and even though the government is not providing as much jobs. So this is our situation. So over the last 5 years, there have been a 582% increase in groceries, in the prices of groceries. So if you're buying yam for 800 in 2020, it's currently 5,000 plus in 2026, right? And yeah, that's been the situation. Yeah, so what is Nigeria's oil paradox? There's a budget windfall. If Nigeria is able to benefit from this current increase in Brent oil prices, even in as much as we are paying our debt through oil, the 40% that still comes to us, I hope is able to patch up companies and the country's revenue, and the government is able to use it effectively, right? The NNPC crude oil revenue surges from $1 rise per price, so there's an increase in crude oil from NNPC. The Nigerian 2026 GDP receives tailwind from expanded oil revenue. So instead of 4.4, we'll probably see a 6 point GDP increase if these Brent oil prices continue. Exchange rate stability supported by improved dollar inflows as well. So yeah, this has been the paradox. From pains to grace, no strategic petroleum reserve. There's no strategic petroleum reserve to buffer short-term prices in Nigeria. Can you imagine that? And we are an oil producing country. And these are some of the pains from these high oil prices.